In today's video, I'm going to show you the best budgeting method for your personal finances so you can become financially secure over time. You're going to budget your money as if you're the CEO of a company. We're going to focus on two main areas: capital generation and capital allocation. Let's get into it. Think like a capital allocator. You are the CEO and investor of your personal finances. The best CEO and investors of a successful company are capital allocators. As capital allocator, you decide how to spend the money you earn in your house. You have to separate yourself from how 90% of the people spend their money. If you follow the same budgeting method as everyone else, you'll get average or poor performance. As CEO of your house, you focus on increasing your investment income, keeping your expenses down, properly allocating money, consistently buying assets, paying down debt, borrowing rarely, and focusing on cash flow, not total income. Your primary goal as CEO is to be profitable over time, not to incur debt to look like you have money. Capital generation, how to raise money. As CEO, there are three ways you to raise money for your home. One way is to create partnerships. Start a YouTube channel or a social media platform and go after brand deals to partner with. Partnerships are a good way to get financial leverage. You make a lot of money and you don't have to pay it back. The second way is to borrow money. You can borrow money from family and friends or a lending institution. This can be a good way to leverage money if you know what you're doing. When you borrow money, you have to pay it back sometimes with interest. The next way is to work a job. It could be get a full-time job, part-time job, or a side hustle. This method is the most difficult because you don't have any leverage other than yourself. With this method, you won't make a lot of money, but you won't have to pay anyone back. As CEO, you have to keep your books. You have to know where you are so you can make adjustments. Click the link below to download the personal financial statement. Business owners use the income statement, balance sheet, and cash flow statement. We combined all three in a simplified form that you can use. Once you open the personal financial statement, there are 4 tabs at the bottom. Fill out for income statement, fill for balance sheet, income statement, and balance sheet. When you enter in your information on the Fill Out for Income Statement tab and Fill Out for Balance Sheet tab, the numbers will show up on the income statement and balance sheet. You do not have to fill out anything on the income statement and balance sheet. On the Fill for Income Statement tab, fill it out as best as you can. For paycheck 1 and 2, enter in your take-home pay, not your gross pay. On the Fill for Balance Sheet tab, fill it out as best as you can. For stocks, enter the principal amount you bought. For income-producing real estate, enter the amount of how much you would get if you sold it. When both of those forms are completed, go to the Income Statement tab. The purpose of the income statement is to see the ins and outs of your cash flow and your income minus expenses, which will give you a realistic number of how much you made. As CEO, you want to concentrate on buying investment income like dividend-paying stocks and income-producing real estate, not a paycheck. Your total income is not how much you actually make. When investors look at companies to buy, they don't look at the gross amount because it doesn't tell the whole story. When your investment income pays for your lifestyle, you're considered financially independent. Your expenses are in 2 parts: fixed expenses and variable expenses. Fixed expenses are the same amount each month, while variable expenses change from month to month. You can live on your fixed expenses alone. Your income minus expenses equal how much you really made. We also call this number net income or free cash flow. This is a reliable measure of your spending performance. A positive free cash flow number indicates you have cash left over. This number should be consistently positive each month, not negative. Capital allocation, how to distribute cash. With the free cash flow, you have to distribute it. Capital allocation strategies vary depending on the situation at any point in time. There are 4 ways to spend it. One way is to repurchase shares. If you already own stocks, continue buying the ones you already have. These should be dividend-paying stocks of small companies and a maximum of 3. Repurchasing shares compounds over time will help you become strong financially. Another way is to invest money into yourself. It could be paying for school or putting money back into your YouTube channel. The next way is to pay down your debt. Start with the smallest amount first and work your way down. The last way is to buy other businesses. It could be buying stocks or income-producing real estate. Head over to the balance sheet. The balance sheet contains your assets and liability. It shows you where you are at this point of time. There are 3 types of assets, but for this video, we'll only discuss 2: cash and productive assets. Cash assets include cash, savings account, money market funds, a 401k, and an IRA. Productive assets include stocks and income-producing real estate. Your total assets minus total liabilities equal your net worth. This is what people idolize in today's society when they read about a rich person's wealth. This number should be going up each month or each year. Now that you know where you are financially, you can now make the necessary changes and start the road to build a strong financial foundation.